Hello everyone, Happy New Year. In this video, I'm creating a sharing of my year-end updates that I've done over the past year on the algo trading experiment. And if you're watching this video, you probably have come across this algo experiment thread that I've created on Hardware Zone since the 14th of October 2024. So this algorithm experiment has been running since October 14th, 2024. And right now it's about 1 year plus in. In this video, I will go ahead and share my updates. So the sharing will be on year-end algorithmic trading update 2025, right? So the table of contents for this video will be opening speech, year in review, or in a nutshell, the overall summary of the performance, my FX book and how important it is, in this day and age for you to a little bit of sharing over there for you to understand transparency, sharing of key learnings and highlights over the past year, which is 2025. There's a lot of crazy events, especially in gold, silver, platinum. The metal space has been very, very crazy. Um, Goals for 2026, and the closing speech. So I'll go ahead with my opening speech now, and I'll share with you all a little bit on how this experiment started, what it is, what is algorithmic trading, and why I invest so much time and probably resources into this experiment. And if it works out, then it will be something that is perpetually, hopefully successful. So let's see. So in the opening speech, let me just share with y'all why I started the algo trading experiment. So I was doing day trading quite a number of years before, I think 5, 6, 7 years ago. And in day trading, you basically spend like 18 hours a day staring at the chart and you're waiting for a price action or you're waiting for an entry point, which I realize I've been spending way too much time on the screen, just looking at it. And the human emotion always come into play. So what happens is that, um, even the most patient human being, and I think I'm one that is very patient, even the most patient human make mistakes because you will never expect the price to go up. And once the price goes above or below your entry point, you start to get anxious, and you may start stacking up from time to time. Which of course, the market will always stay more irrational than you staying rational. So, and also as a human, you can't have the precision that a computer have. So after trading for a long time and spending so much time staring at the chart, I realized that, it's essentially not productive. And I figured that, okay, if I'm just waiting for parameters to happen, why not I just create a program, a code, right? And subsequently, it can automatically trade for me. So that was how this algorithmic experiment started, I think about 4 years ago. So during COVID, it kind of like started. And basically, it has been running from iterations to iterations to iterations. And I would say that it has been a very long journey. But with the thread, it was started as a more of a higher baseline. So it wasn't really like from day one, but it has been like 3 years in the making. And subsequently, I started the thread. And even then, from the time the thread has started until now, there's still a lot of learnings. So, algorithmic trading is basically the idea of using computers, right? And algos, of course, to be able to eliminate the human element, have accuracy and precision, and of course, the last but not least, which is also the most important thing, finding the edge. So, like how do we find an edge? Um, and in because as algo trader, I can use extreme parameters. So, for example, I could, for example, be very precise with my RSI entry, or my MACDs. I mean, there's a tons of strategies out there, but the idea here is that for example, when RSI on the 4 hours hit 95 RSI, um, I would then enter a trade. I mean, as a human, it will be very difficult for me to do that. To actually monitor all these vital statistics. But as a computer, I can do that. Very with precision. So okay, when hit this RSI or that RSI, I mean RSI is the most straightforward age probability, right? When RSI is at 95, it means that it's extremely overbought. When RSI is at 5, it means that it's extremely oversold. So, of course, this extreme can actually go a lot more extreme downwards or upwards. Hence, the algorithmic trader basically creates edge through using algos, removing emotion. So, for example, I could do a 95 RSI short, followed by a doubling down when it has, for example, the position has lost 10 times into my existing margin. So, for example, I place a $10 margin short, and after that, um, it went all the way south and it hits -$100, right? So, my original margin was $10 and it went $100. I would then place my doubling down. I could actually, I mean, that those programming remove the anxiety out of the human emotion, because the human emotion would have by $12 negative, by $15 negative, you are double down, and if the symbol that you're trading is not as liquid or less liquid, it can be manipulated and you could be liquidated. So algorithmic trading has a lot of learning on this, which I'll go into later sharing as well. But in a nutshell, right, we come to our summary. So since the start of 14 October 2024, I have done 19,630 trades. So that's a lot of trades. Um, it's not high frequency trading, it's just purely algorithmic trading. Of course, in the early days, the parameters were less sensitive. So I actually had more trades in a day than what I have now. So from the start of the trade, the parameters was also very or compared to now, there's less features, less functions. So this algo trading has always been this experiment has been developing, and the code has been improving all this time as well. So every crazy event that happened, there's a learning to it, and there's a code improvement, or things that I did not see previously that now I see. So 19,630 trades. I have a I would say it's generally nice, right? To have a long and means a longing one rate of 87%, 6,956 trades of 7,908 trades. And I have a short win rate of 85%, 9,989 trades over 11,722. The good thing about algo trading is that the potential is in the law of big numbers. So statistically, the law of big numbers will actually have more reassurance in terms of the probabilistic outcome um, to a long term, frame. Whereas if you have lesser trade, you don't really have that data pool. But of course, market is very volatile and it can always play out extremely different from how you want it to be. So it is. I'll say it is a very very delicate learning process. So of course, profit factor, deviation, Sharpe ratio, right, Z score, expendency, all these things, not really a metric to look at, because overall this algo system, thus far, right, is still in a loss. So it's still paying school fees, and I'm still learning from all the exercise. So I'll come into the performance. So this year, right, unfortunately, because of few mistakes made, I'll share those mistakes so you get to learn as well, right? But this year, basically, I'm down $49,152.22 so far. So it has recovered uh over gradually over the past few weeks since the last drawdown event. But I made a lot of changes. So basically, as you can see, this month so far looking healthy, right? With $3,000 gain, 29% up, right? And there was total of 347 trades for the month of December. with a 91% win rate. Of course, like I said, chat, since the last drawdown event, there was additional more features added. And the win rate now has bumped up. I think it's averaging about 95%, which is pretty good. So weekly is 87%, 200 trades, and today, which was yesterday, was a 95% with 45 trades. So that's how this algo is performing so far. Generally right now is yielding anywhere between $0 to $200. The control is somewhere around there. A happy day is a $50 to $200. Um, which of course, the idea here is that while it sounds nice and it sounds like wow, it's very profitable. The idea here is that you're as an algo trader, right? I'm always very pessimistic. In fact, it's dystopian to the point because there is so much unknowns and so much volatility. For example, silver, platinum, gold. Um, you could be you could be wrong many times. Um, so think of it like a baccarat game. The streak can be 18-21. And as a normal retail trader, I know myself. As a normal retail trader, I will have passed away many times, guaranteed. So the idea here is that this algo trading system actually saved me. So the idea here is that while it generates all these yields, is also to break even eventually, and that's the goal. So let's go into it. The best trade 2,200. These are all crazy days. I mean, honestly speaking, these are way out of parameter and it's very risky trades. Worst trade, of course, these are all the drawdowns, and I'll go more into it. Average trade length is 14 hours, which is not great. I'm actually looking to like really reduce it to higher precision. Um, yeah, but let's go into it. Average win is $7. Average loss is $60. Not good. That means for every loss you have 10 times your wins. So that's not good. But with the improvement in algo, I think we have done I have done a good job in reducing that. So we will see. So in a nutshell, this is the growth chart of the algo since the beginning, 14th of October 2024. So you look at the gain, it's horrible. It's like minus 99%. Absolute gain is minus 23%. This is the real losses that I've taken a hit on. Of course, all these are not so good looking, right? Minus 1.44, minus 35.31 monthly, right? Drawdown horrible. So there was a horrible event that happened this year. Sorry, last year, and there's a lot of learnings that I will be sharing as well. So balance right now 19,777.26, right? Losses right now. I think this is all time 41,800 and an interest of $7,900. So interests are basically fees or swap fees that you pay. So basically, all in all, deposits $174,549. Withdrawals $112,970. These are the most accurate. So basically, more or less is about $60,000, $50 to $60,000 of so-called unrealized take profits. So the reason why is because the portfolio still has $20,000 right now, and these are all pure. So basically, I have not really been adding or yeah, but basically the sum of it is that right now there is about $40,000 of loss, which is accurate over here, and that equates to some timeline. So basically, assuming that it has a weekly target of hitting $700 a month. Sorry, $700 a week of profits. It would take about 100 weeks, so about half a year or so, on a good terms to break even. And if we can break even in half a year, then basically this algo system that I have right now, without actually having a black swan event, which happens from time to time, will be able to basically generate $100,000 a year. That's more or less based on the parameters that I set, the lot sizes, what's the entry size that I make. That's more or less. So as the portfolio grows, of course, I will be scaling that up as well. So like they said, like Einstein or Newton said, The Einstein said the world's eighth wonder is basically compound interest. So I'm looking at the compounding effect as well. So once this goes green, it'll be pretty awesome, which I expect in 6 months' time, assuming that nothing goes wrong. So let's go into balance. So as you're gonna see, the balance of this algo trading when I first started, it was $1,000. So $1,000, it grew, and then it hit its first black swan event. This event, if I didn't recall wrongly, was I think also silver. It was silver. Uh, Basically, it's metals, and basically for CFD trading, what I'm doing, um, once your margin means your equity to your position size is less than 50%, you'll get automatically stopped out. So most of my drawdowns events actually was because my margin was hit. So in a sense, like margin called. And they automatically stop you, and that results in heavy losses because you still have other trades running. And the algo, oh yes, so basically the algo kept firing trades because during the first drawdown, the algo parameters were less sensitive. So when it's less sensitive, once it has a volatility event, it just keeps placing trade. Of course, my lot size and everything wasn't really that optimized as well. So, it just kept firing and firing and firing. And as it as the orders get filled, uh your margin float drops. And once it drops below 100, you can't place anymore, you can't fill any more trades. But then anything that went south, it will eat into your margin and margin float, and eventually when it hits 50%, you get automatically stopped out, which is my mistake on the new on this platform that I'm training on. So didn't quite really understand the rules back then. And also there was I think a spread. So I remember. I think it was platinum. The spread was like 600 pips. So the idea here is that I got stopped out simply because of the spread, and that was a $10,000 mistake, I think. So yeah. So it was at so from $1,000 it grew all the way to about $20,000, and then it had this first drawdown event. So this drawdown event, at that point, I think I made a few changes, mainly removing some of those. Oh yeah, yes, I was trading on every single symbol out there as well. Take liquidity, thin liquidity. I was trading on all of them, which is a big mistake. So please do not do that. So from there, remove the symbols, traded back, right? Had a drawdown event, but it went back up. So these are small numbers. So these are like $5,000, $4,000, drawdowns, which is not great. I mean, honestly speaking, any drawdown is not great. So the idea here is that it came, right, went up, it shot up over here. I think this was also a volatile metals event. So the metals event, it traded, and of course, it managed to get out. Um, but the thing here is that I don't know. Volatility event happened, and basically it had a major drawdown. It's still fine. And then of course I went and continued. I mean the algo continued traded, and it had a drawdown again, but this was the big one. So over here, the reason why this happened, same with over here actually, is almost the same. Over here, right, it was silver, and over here it was silver as well. So over here, the event happened because of a combination of few things. Number one, um, it was over trading. Number two, right? In terms of the parameters, it wasn't tight. It was still, it was tighter than the previous rounds, but it was still not tight enough. Um, Number three, of course, there was a systematic lapse, I would say, in terms of the algo. So the algo was actually not running, and because it wasn't running, that the stop loss couldn't be moved, and it led to this entire explosion, which cascaded. So basically, what happened is that when you have a lot of trades open, your margin requirements, let's say your margin goes down and it hits 60, right? And once it hits 50, you are going to close your biggest size trade right away. Now, once your biggest trade is closed, your margin doesn't go back up. because you have already realized those loss. So it's still at 50. So you start stacking up on all the losses trade, and your whole portfolio vaporizes in a moment. So there's a lot of learnings over there. And of course, this recent one was basically margin requirement. So silver went all time high. I Oh yes, I also meddled with it. So like the human intervention, right? I manually double down because I think that it has reached its top, and that was a grave mistake. So over here, actually, this big drawdown, right, was the one that actually made the most amount of systematic update thus far. So right now it's coming back. So looking good. Profit. So profit right now you can see that it went up to almost 18K. That's the all-time high. And then after that it started having all these drawdown events, bam, and minus 25, came back up. I remember this moment, on Hardware Zone, I was sharing and everyone was very excited and happy about it. And then bam, right, coming down. This was a silver event. And I recall myself at Holland V, just staring at my phone, because it all happened in like less than 10 minutes. So here I am, right? Minus 41,000. So it will eventually come back, but it will take more time because the algo is more conservative now. All right. So I'm going to talk about my FX book. It's very important. I know that there's a lot of gurus, trading people, day traders, which I think is very respectable. That they can keep doing it for years and years. But the general idea here is that yeah, it's very hard. It's a very competitive sport, and you're fighting against people with like nanoseconds, right? Nanoseconds in terms of the ability to place a trade and get out of a trade. So like milliseconds is already considered slow. So I don't know a human's reaction time is gonna be able to actually place good trades. But of course, that is saying that long-term investors are generally more risk averse. But day traders, I'm not too sure, how it works out over the long run. But what I can recommend everyone and share is that use my FX book, or if not, ask your day trader or or whoever to connect their account to my FX book, because my FX book basically is like a ledger, right? You can't if it's a demo account, it's a demo account. If it's a real account, it's a real account. How much balance in that account, what trade it makes, how many trades it makes, right? The overall portfolio over the age, like the age of the portfolio, you can see all those. Which will allow you as a potential, learner in this space, or not say learner, but let's just say you are a warrior in this space, because it's really a gladiator match. A warrior in this space to have the right ideology that if you're going to the Colosseum, you might be dying over there, and you need to know who you're up against. Um, and not just listen to someone to say that, oh yeah, you are going into the Colosseum, but I'm gonna give you a magic buff, and you are gonna be all right. I mean, that's snake oil. So I hope that more people get to know about my FX book. I'm not affiliated with them by any means, but someone on the thread shared this my FX book with me, and I realized that this has been the greatest thing to transparency. And I think that's what this space more or less needs: accountability and transparency, because it's hard to be a good trader. It's easier to sell causes. And of course, if you're selling option costs, you get paid a lot of commission because options fees are extremely high. So whatsoever. Pepperstone. So basically, sorry. So basically, right over here, this is the growth chart. Of course, the growth doesn't look that nice. But one, so the growth is actually, this is I would say not a very very good chart, because once it comes back up and once it hits zero and it goes up, it's exponential. So we will see. Sharing your key learnings and highlights. So basically, do not overtrade. Be very strict with your rules and parameters. Be surprised at a lot of times because of the volatility in the space. Be surprised and always have buffer. Know about your margin requirements if you're trading CFDs. Um, and always remember that the market can always stay more irrational than you can stay rational. So even if you think that, for example, silver is at $78, you can just open at 82 and go to all the way to 84, which got me. That was just a few days ago. You got my heart racing, you know. And the thing here is that so imagine if you do not have a systemic approach to this, you would be emotional and at 80, 78, 79, you know, or like 82, you'll be doubling and tripling, and then it goes all the way to 84 and you'll be finished. So the idea here is that always follow your rules. Always set enough. If you are playing the doubling down DCA method, or you call it the martingale whatsoever, always set a huge buffer. So for example, if you have a position at 78 and it's $1,000 on silver, for example, a shorting of silver at $78,000, you might want to wait until your $1,000, depending on the leverage that you have. But let's just assume that $1,000 is like $10,000 in losses before you even consider doubling. Because if you double at 1,500, 2,000, and you think that the chart is going to go down, you usually don't. And then in CFDs, it's a little bit more complex because the thing here is that you're trading against an order book and there's a spread. So you know your buy price and the sell price is there's a spread to it, there's a gap to it, and it's oftentimes you know that age that the house age that they have, right? If you're not precise with it, you'll be very you get your hands burnt. So just be careful. Goals for 2026, very simple, right? This algo, if it works, and nothing goes wrong, in the next 6 months or so, it should break even. And if it can break even in 6 months, in a year, it's a 100K algo. I hope to see that happen. And if that happens, I'll gradually scale it up as well, to see how far it can run. And in a nutshell, I think this very important is that the algo experiment is very, very entertaining. It's very, very, it's a huge discovery process because you are essentially age finding, and your parameters are constantly improved from all these mistakes that you have made. And there's two parts to this: to know what mistake you have made, or to not even know what mistake you have made. So, you know, for me, I've been very blessed in the sense that I know what mistake I made. Therefore, I improved it right away. And that allows me to have a more resilient algorithmic trading system. Um, and I think this will be basically the goal for 2026 is that, you know, let it run as per usual and hope for the best. And if there's because of the parameters, it has been improved over time for quite some time. It should perform better. I hope to get my win rate up to 95% average. I hope to break even, and I hope to generate an average of $100, $200 a day, conservatively until I break even. And then after that, if it does break even. So the thing here is that, you know, breaking even is one thing. That's just returning to the starting point. And then after that, you know, the growth from there, how do we um then scale, you know, that will be a learning journey on its own as well. But generally, through mistakes improve, and I'll constantly share my sharings as well. And you know, if there's big loss days, I'll also be sharing. So don't worry too much. Yeah, that's all. So closing speech, you know, I hope you all like the video, and I hope it's informative. I know that, you know, this is very uh unorthodox way of sharing my portfolio or my algo experiment, and probably there isn't much out there. But the idea here is that it is an experiment, and you know, with that understanding that it is an experiment, that this portfolio can lose it all, and it has many times, or that few big drawdowns is enough to scare a lot of people. But the idea here is that how do we learn from these mistakes, and how do we improve it so that the iterations, and of course we are talking about like tens of 10,000, 18,000 iterations, right? How do we actually stretch that survival rate to maybe, because you know, volatile events can happen for years, from time to time. I mean, for example, the market could crash 30%, who knows? So the idea here is that how do you stretch the survival, right, to let's say a 10-year cycle, 20-year cycle. And by then, your multiples will be so much more than your capital that you will be able to actually just spin secondary and as sub roots of that. Those are like my little goals and part of this experiment. So I do hope that it can create $1 million algo trading. So I could just sleep all I want and have a good time while running my other businesses as well. But in all nutshell, um, that's a very optimistic outlook. And algo trading, like I said, algo trading is really considered an age. You have a technology on your end to be faster than anyone out there, uh, except the computers. But it's one way of me seeing it as an evolution from day trading. Of course, day traders are respectable in their own manner. Retail traders as well, long-term investors. I think everyone have their different purpose in the market. Um, and I hope everyone does well in the coming year. So 2026, all the best to everyone. Thank you so for watching the video. Have a great day.